Hello, I just want to give you some ideas and personal remarks concerning the market situation of non-performing loans, distressed assets. Maybe before the German Non-Performing Loans Forum conference in Frankfurt in May 2011 or the Italian conference organized by Consolving SPA in Milano in June this year, it gives you some more or other ideas and views. I would appreciate your comment, experience, or by LinkedIn, crossing, or emails and will distribute the given information. The actual market situation about non-performing loan packages. Financial institution holds real estate-based assets which are not strategically. Second argument, financing, equity, even for traditional investors, is quite selective and expensive. Exposed position of financial institution does not allow selling assets under a certain level without respecting IAS rules. A lot of serious investors are disappointed because during due diligence process with the bank realized only in that moment that they cannot sell, but couldn't tell that in that stage to the investor anymore. The disappointment is a bad situation. I personally think the attitude of even some of the biggest banks in Europe is damaging a bit the market, especially of not responding for not admitting failures of their part. The result at the moment is that the market is blocked. When do you personally think business in the NPL segment will increase again? A comment would be great. So, let's come to the solutions. I call the first solution real active marketing. Real because marketing is not only communication and advertising. Here, the bank puts the real estate assets in a SPV by selling it for convert in a second step the bad SPV through marketing and active asset management activities to a nice, worthy SPV. With a focus or goal in the third step to find an investor who invests in the property getting or buying the shares. And so it makes really a worthy SPV out of that NPL portfolio. The second solution, I call it joint venture. The difference here is quite easy. The bank finds right in the beginning or integrates right in the beginning the investor, and they both together creates a SPV. Here it is essential that both define and manage the credits, interest, and investments. For an effective risk management, both have to integrate a good asset management, good advisors and advisory, and especially auditing for leveling or risk, and really examine if the planned results are given or realized. And last but not least, cash flow sync, an IT solution which integrates all the structures and activities of both. The third solution, I call it sell it for what you get now. That's very important. Here, I'm sure the bank won't get the best result, but it's their decision, especially because investors now, meantime, the bank situation very well. The last solution, it's a shame to call it even solution, it's hide it. But I'm sorry to say, I think it's very common still. Ignore the problem and hope for better times concerning NPL and distressed assets. What happens there? Everybody waits for a new management board or a new management in the bank. My personal remark, vacant properties lose additional 20% of value per year. So now it's on you. What is your opinion, experience, or do you see alternatives concerning these four solutions? I repeat, ignore on the left side is a bad one, just doing nothing. Still better one is to sell it. That's one option. In the past, banks tried to sell it and realizing the value is not what they need, they fall back to the lower ignore. situation. On the right side, you see real active marketing means make the package nice to find in a second step an investor. And the most progressive alternative is a joint venture directly in the beginning with a special investor, professional investor in that area. Thank you very much for your attention, and you find even on the internet more presentations, including a rating system concerning the quality of information of bad assets and real estate. Thank you.